Welcome back to Investing Talk Podcast. Today we're digging into a company that, it's certainly been getting a lot of attention, navigating some pretty interesting market currents, we're asking. Is Rocket Companies a good buy right now? We've got our usual stack of research, recent articles, expert takes, going to sift through it all for you. But hey, before we dive in, just a quick heads up. If you like what we do here, find these discussions useful, please hit subscribe, maybe like the video or audio, and definitely leave us a comment. It genuinely helps us out. Oh, and if there's a company you want us to look at next time, just pop the name in the comments. We really do look at those suggestions. Okay, so Rocket Companies. Most people know the name, probably through Rocket Mortgage, that online platform. But our sources are pretty clear. They're more than just mortgages these days. It's really a fintech platform now, branching out into other financial stuff, trying to be, a bigger part of your financial life.
That's spot on. When we look at Rocket, we're seeing a company that built a really significant foothold in mortgage origination, mainly by using tech really effectively. And what's fascinating now, and what our sources really dig into, is how its performance, its outlook, it's all tied up with both that digital strategy and the wider market forces. We've got some fresh info on the fundamentals, the technicals, and yeah, some potentially big catalysts coming up.
Okay, let's unpack that. Starting with the fundamentals. Sources mention they're into personal loans, solar, real estate services now, not just mortgages. So when we look at its basic health, what's the key takeaway from our sources right now?
Right. Well, the latest figures show their total funding capacity was about $26.4 billion as of September 2025. And that capacity for a mortgage originator, that's absolutely critical. It's the money they use to actually fund the loans before they sell them on.
26.4 billion. That sounds like a lot of runway.
It is, yeah.
But I notice our sources also flagged it's down slightly from the end of last year, like $27.5 billion then, though up a tiny bit since June.
Good catch. That slight year-over-year dip from $27.5 billion down to $26.4 billion, it's worth noting. It suggests maybe a bit more caution, or perhaps just strategic adjustments in a, let's face it, trickier market. Even for a big player like Rocket, access to that funding is everything. So yeah, it's substantial, but the trend warrants watching. Puts them in an interesting spot in what our sources call a highly competitive market.
Yeah, highly competitive feels like an understatement for mortgages sometimes. It's cutthroat.
Yeah.
So how does Rocket actually stand out in that environment? What's their edge?
Their main thing really is that digital-first Rocket Mortgage platform. They poured resources into making the whole process, application to approval, as smooth and fast as possible online. That's their core advantage: speed, convenience.
Makes sense.
But the sources do point out, without really recent detailed market share numbers or side-by-side financials with competitors, it's kind of hard to say exactly how they stack up right now. We know they're strong, but the specifics are a bit hazy.
Okay, got it. Digital strength is clear, but direct comparisons are tough. So moving from the core health, what about recent market action? Stock price, any insider moves? What's the vibe there?
Yeah, so the stock itself, it's been trading in a fairly tight range. Our sources noted some insider transactions around $20.26 a share on September 7th. And then the stock closed a few days later, September 12th, at $21.12. So yeah, hovering around that $21 zone.
Okay, range bound. But you mentioned insider stuff. Sources flagged significant insider selling on the 7th. That usually makes people nervous, right?
It does, yeah. That phrase insider selling definitely grabs attention. But here's the crucial detail the sources provide. These weren't like executives dumping stock because they think the company's going down. These were automatic withholdings to cover taxes when their restricted stock units, or RSUs, vested.
Okay. So part of their compensation package automatically selling shares for taxes.
Exactly. Like the CEO had over 50,000 shares withheld. The president had over 16,000. It's routine stuff, completely different from someone actively choosing to sell on the open market because they've lost confidence. That context is vital here.
That is a huge difference. Good clarification. Anything else on the news front or general sentiment?
There was some administrative paperwork filed, an A&R master repurchase agreement that relates to their funding facilities, but sources say it wasn't a material change, just sort of procedural. Really, the bigger sentiment drivers right now seem to be the overall market mood and, more importantly, some major corporate actions brewing.
Right. Okay. Let's get into those. The catalysts. What are the big potential needle movers for Rocket coming up?
Okay, well, the most immediate one is their Q3 earnings report, the 10Q. That covers the period ending September 30th, 2025. That'll give us the freshest look at their financials, loan volumes, margins, how they're actually doing right now.
Definitely one to watch.
Yeah.
But the sources also really hammered on something potentially massive, that Mr. Cooper acquisition. What's the latest on that deal?
Yeah, this is arguably the biggest thing on their plate. Huge potential impact. So back in July, Mr. Cooper's shareholders gave it the green light. They approved the merger. The deal is structured so Mr. Cooper shareholders get 11 shares of Rocket Class A stock for each of their shares, plus maybe a $2 dividend per share before it closes.
Wow. 11 for 1. That's significant.
It is, and they expect it to close before the end of this year, 2025. That's assuming, of course, they get regulatory approval and tick all the other boxes.
Okay, so if this goes through, what does it actually mean for Rocket strategically? Just bigger?
Well, much bigger, yeah. It would massively increase their loan servicing portfolio that's managing existing mortgages, collecting payments, and boost their overall market share quite a bit. Think economies of scale, cross-selling to a much larger customer base. But, and it's a big but, it comes with major execution risks. You've got potential regulatory hurdles, the sheer complexity of integrating two huge companies smoothly, and how competitors might react. It's not a guaranteed win just because the deal closes. Oh, and tied into this is an extension on an offer related to NationStar mortgage notes that's basically part of the financing structure for the Cooper deal. They pushed that deadline to September 30th.
So, a lot riding on integrating Cooper effectively. Okay, stepping back from company specifics, what about the overall environment, housing, interest rates? How that playing into Rocket's story?
That's critical context. The whole mortgage industry is super sensitive to rates, and the housing market, as you know, rates go up, fewer people borrow, rates go down, refinancing can boom. Our sources noted rates actually hit a 10-month low back in June, like 6.56%.
Which sounds good.
Right, but demand stayed kind of sluggish. And even with lower rates, average monthly payments in July were still up 5% year over year, mainly because home prices are just so high.
Yeah, prices are still nuts.
Exactly. Median U.S. home price hit another record in July, over $443,000. But here's a weird twist. The actual number of homeowners dipped slightly in June for the first time since 2016. More people renting.
Huh. Affordability biting hard, I guess.
Seems like it. Signals real pressure, maybe changing preferences too. We even saw Canadian buyers pulling back significantly from the U.S. market in August. Demand dropped almost 20% after some new tariffs kicked in, and listings growth slowed down too. So the market feels tight, maybe balanced, but definitely challenging. All things Rocket has to navigate.
Okay, so that's the confirmed stuff, the market backdrop. What about whispers? Any interesting rumors or speculation our sources picked up on?
Yeah, there's always some chatter, right? One bit is speculation about Rocket pushing harder into non-mortgage stuff, personal loans, maybe even credit cards. Kind of a fintech diversification play.
Makes sense, leverage the customer base.
Right. Then there are rumors about tying up even more closely with Redfin's platform, trying to capture more of that direct online mortgage business by being sort of embedded in the home buying process there.
Interesting. And related to the Cooper deal, any specific worries floating around?
Yeah, some industry watchers are apparently asking if the combined size of Rocket and Mr. Cooper might attract more intense scrutiny from antitrust regulators or fair lending watchdogs.
The bigger you get, the bigger the target.
Pretty much. It's a potential risk factor for the deal getting finalized smoothly. And finally, just sort of unconfirmed buzz about internal projects using more advanced AI to speed up underwriting and approvals even further. Cut costs, reduce errors, that kind of thing.
Okay, so putting it all together, the numbers, the market, the massive merger, the rumors, what's the final verdict from our sources? What's the overall rating or outlook?
Well, after weighing everything, our analysis lands on a 5 out of 10 rating, basically neutral. And that neutral rating really reflects the fact that while we have some data points, there's maybe not enough clear forward-looking info for a super strong conviction either way right now. Yes, they have good funding. Yes, the digital platform is strong. But you have that slight dip in funding capacity, the insider selling, even though it's routine, providing kind of mixed signals.
5-10. Dead center.
Yeah.
And the wider market isn't exactly helping push it one way or the other, is it?
Not really, no. The whole mortgage sector is still dealing with these higher rates, even if they've dipped a bit, plus the affordability crunch, the shift towards renting. These are real headwinds. And that Mr. Cooper deal, it's potentially transformative, a real game changer if they pull it off. But the if is important. The execution risks, regulatory integration are significant.
So for someone listening now, thinking about Rocket, what's the takeaway? What should they be focusing on?
The sources really emphasize that Rocket's at a crucial point. So for you, the listener, it means keeping a close eye on a few things. One, how does the Mr. Cooper integration actually progress? Any regulatory snags? Signs of smooth sailing or trouble? Two, How do those nation-star note holders react to the extended offer? That's key for the deal's financing. And 3, what do those upcoming Q3 earnings actually show? Do they look resilient in this tough environment? Without clearer guidance from Rocket itself, it's hard to call an optimal investment time frame. It really feels like a watch-and-wait situation for now.
Wow, yeah. A lot to track there with rocket companies. It's so clear that even with a powerful digital engine, these huge external factors in the market, that massive Cooper deal, are just dominating the narrative right now. Definitely feels like a pivot point for them.
It really does, and it kind of leaves you with a bigger question to chew on, doesn't it? How much can that tech advantage, that digital efficiency that Rocket clearly has, really shield a company when the macro environment gets tough and they're trying to swallow another huge fish like Mr. Cooper? What's the real resilience level for these big fintech players in markets that are so sensitive to things like interest rates? Food for thought.
Absolutely. Something to be thinking about. Well, thanks for joining us for this breakdown of rocket companies. We hope this gave you a clearer, more detailed view of where things stand and what to watch. As always, remember, this isn't financial advice. Do your own research. Talk to a professional before making any investment moves. We'll be back soon with another analysis. Until then, stay curious, stay informed.